Sinha joining us now from Paradigm. Punita, good morning. Let's get your view on those higher taxes on the super rich, the surcharge and FPIs. Do you see it impacting flows significantly?
When you look at the developed world, particularly US and UK, it is not unusual to see these kind of tax rates on high income earners. Of course, when you compare it to Southeast Asia, these numbers seem high. Now, if you look at the question about whether FPIs are going to get taxed more and what that'll do to flows, my own sense is that I'm not sure that the government was doing this deliberately. I think that is probably unintended consequences of raising the surcharge. And I think that if enough FPIs make representation to the government on this, maybe there will be some clarification that might come out, because I don't think the government wants to reduce foreign flows.
How did you rate the budget overall, Punita, particularly from the point of view of kickstarting consumption?
You know, the budget is obviously focused first and foremost on the health of the rural economy, because the rural economy has been facing quite a lot of serious challenges over the last several years. So that's where the emphasis has been, and to improve the quality of life of the broader public. Now, it's obviously taken that away. In a way, the revenues are coming to some extent from taxing some of the higher income people, which is, when you compare it to the developed world, that UK and the US, then it's not out of line. But of course, if you compare it to Southeast Asia, then it seems high. In terms of spurring growth, I think the budget has tried to focus on certain sectors of the economy, particularly the banks and the NBFCs, which are very, very important to the health of the overall economy.
Punita, how do you see the Fed now cutting rates in the near term? Because that seems to be the consensus. And how do you think this is going to impact the flows to emerging markets?
You know, I think at the moment, the environment all over the world is this tussle between central banks and heads of governments, where the central banks are still a little hawkish, and the governments are wanting them to cut rates. And we've seen the recent casualty in Turkey. So I think even though the jobs data has come out good in the US, there will be constant pressure, in my mind, by President Trump on the Fed to cut rates. And I think that pressure we see probably build up in all parts of the world. So I think in general, we are probably going to see easing monetary conditions. But of course, longer term, the concern is that may lead to inflation. And so that I think that balance still has to be struck.
So, Punita, what's your overall call on the Indian markets in the medium term in light of the slowdown as well as the global setup?
I think the EMs look better positioned than the developed markets, simply because of valuations. The valuation disparity between EMs and the US is still quite wide. And in situations like that, in the past, you've seen EMs tend to outperform. So I think EMs are looking better from a valuation perspective, and the growth, although in the US by companies that have been reported so far, is higher, and EMs has been a little bit on the weaker side, I still think that going forward, perhaps the growth mismatch may not be as much. Now, having said that, when we talk to companies and managements, from what in India, we used to hear about 15 to 20% growth numbers in EPS earlier. And now when you talk to managements, they're talking about 10 to 15% growth. So that is quite low in the context of India's own history. So I think definitely CapEx cycle needs to pick up. And if the banks start to lend and liquidity conditions are eased further, I think that the economy will probably see that some strength, and that benefit should then go into some of the corporate sector as well.
Okay, Punita, Q1 earnings all set to begin. Expectations this time are pretty low. What's your own sense on which sectors perhaps may surprise or do well, even in line currently, and which ones you see languishing?
I think the one concern we have to keep in mind is the supply of equity that might come over the next 6 to 12 months, especially with what's been announced in the budget, with the government cutting their stake in PSU banks, maybe potentially the plan to increase public holding from 25 to 35% could mean companies like MNCs and others having to also issue supply of paper. So I think that could weigh on the markets, and therefore one would have to be stock specific. But if you look at the sectors, I would still think that the financials is probably where you will still see growth, and then selected consumers and selected other companies will continue to see some growth. But generally, I'm not expecting a very strong earnings session this coming quarter.
So do you think that this is going to be a sharp but a shallow correction, or do you think that we're in the start for a deep one?
The correction that we're seeing in the markets is not just specific to India. What we're seeing is a correction globally across the world, and the timing of the budget, unfortunately, coincided with the start of the correction across global markets. So some of the correction that we're seeing is just as a result of what we're seeing everywhere else in the world, and some of it is probably specific to India.
Fair enough, Punita. Appreciate you joining in and giving us a view as to what you make of the overall FPI issue, the fund flows to India. So as of now, you are saying that it appears high when we compare it to our South Asian peers. But, don't you believe that, if enough FPIs do make a representation to the government on tax, then we could actually see some clarification, which is what the markets seem to be pinning their hopes on. So